Hello everyone, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on a few more responses to make sure everybody's up and running fine. Type OK in the chat box if you would, if you're hearing me clearly and seeing my screen all right. All right, great. We've got enough responses. Looks like everyone's up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind that no one trade is guaranteed to profit. Each and every trade that you take involves risk. The other side of that is each and every trade that you take certainly has a good potential for profits as well. That's why we're all here, I would think, to try and hopefully find the best ways to go after those potential profits while limiting our risk in a way that makes sense. You want to individually have your own risk management plan in terms of exposure, the amount that you want to risk per trade, etc. Before you start trading, that would make sense. And you can manage risk in a number of different ways with stop losses using our AvaProtect feature as well can help as part of your risk management plan. Keep in mind as we go along that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Hello, Razwana, welcome. Good to see you again. Okay, as we go along, if you have any questions or if you want to give input, please do so if it's pertinent to what we're talking about. Real quick, what is technical analysis? For those of you who are brand new to things, basically it's looking back at the historical movements, the price movements of a particular instrument. And usually we're looking at candlestick charts when we're doing that and trying to find patterns that seem to be repetitive or lend some predictability to future movements. And so that's the idea of technical analysis, to try and gain an advantage to help you better guess or better predict which way future movements will go. And many traders find it helpful to utilize technical analysis prior to placing trades and even after placing trades to decide when to get out of trades. And so we'll go over strategies on the live charts in the session today. We'll take a look at how our web trader platform, how the AvaTrade Go mobile app can assist you with your technical analysis, simplify things, get some of the work done for you, and make things a bit easier for you as you go into deciding what to trade on and save you time in terms of the technical analysis work that many times you have to do manually. There's nothing wrong with having some help in that regard if the lines are going to be drawn where you would have drawn them anyways, etc. And so I'll show you some of the features that can really help you out with your technical analysis and your risk management for that matter when using our web trader platform and our AvaTrade Go mobile app to trade on your MT4 and MT5 accounts. Okay, so real quick, let's take a look at some of the headlines that are out there. Then we'll get into looking at our mobile app and our web trader platform to carry out our technical analysis strategies on the live movements, taking into account what's happening today fundamentally as well. What is happening fundamentally? Wall Street tumbles on hot producer prices as Fed meeting looms. Okay, what does all that mean? To simplify that, basically what used to be viewed as good news is being viewed as bad news, meaning the purchasing price index, if we look at it here, out of the US, the PPI, purchasing price index, it shows what producers of products are paying for their raw materials, basically, for the products they buy to make things. And you see the increase in price month over month, more than expected. Okay, year over year, more than expected. You know, to expect 9.2% increase year over year is already a high expectation. And then it comes in over that at 9.6%. And the same for month over month. To have a 0.5% increase in prices in 1 month is somewhat high. And it came in much higher than that at nearly 1%, 0.8%. It's quite a percent overshoot of what the expected amount is. So, to go 0.3 higher than 0.5, that's a 60% higher number. To have 0.8 instead of 0.5, 60% higher than expected. So usually, why is that usually good news? Look, it's listed in green. Usually when the numbers come in green, that means good news. That means the economy is roaring and doing well. The prices are going up because there's a lot of demand, and that shows a good sign for the economy usually. The problem is there's too much price increase now. There's so much demand, and the prices are rising so fast that, yeah, healthy inflation shows a healthy economy, but hyperinflation shows that there could be a problem, that prices are rising too fast, and that's what these numbers kicked in. That, wow, the hyperinflation is still there. It is not transient inflation like the folks in the U.S. that are making monetary policy were trying to spin off for a while. They've even in the past weeks admitted, okay, there's nothing transient about it. This is big time hyperinflation, and they need to do something about it. So this gets to the point of, why did the markets pull down? Why did gold pull down? Why did the dollar strengthen if there was this news that came in that there's high demand in the economy? And so the answer to that is because there's a confirmation of hyperinflation here, again, in the data that's come in on the economic calendar. The FOMC committee out of the US, and also the folks who make monetary policy in the European Union and in the United Kingdom, they're all meeting this week in their own separate meetings, of course, but they're all deciding and talking about monetary policy moving forward. The FOMC committee meets tomorrow and Thursday. They're going to talk about whether they'll increase interest rates soon, whether they'll pull back on the stimulus measures, the bond buying program in the US. They're calling for some tapering of that to try and slow down inflation, etc. And so the fact that these numbers showed so much inflation, it kicked in the fear that, wow, for sure the Feds in the US are going to cut back the bond buying program that's been helping to prop up the economy. And it's also been weakening the USD because they're printing a bunch of money to buy bank bonds and prop up the banks and the economy. And so all this money they've been printing and causing inflation or weakening of the USD, they're going to try and reverse that maybe. That's the fear with these high inflation numbers coming in today. And so that's why with what's usually good economic news, showing demand in the economy, the fact that it's viewed as over demand now, you see the US 30, US 500 futures were red pretty much all day. The market opened in the red, and we've got the only things that are green are the VIX, what's referred to as the VIX fear index or volatility index. So fear is way up in double-digit percentage. That is a sign of significant fear about what's to come. When you've got the volatility index up over 10%, and the dollar index tends to rise when there's fear. The US dollar is strengthening. Why? Because there's expectation that the FOMC committee this week is going to talk about pulling back the bond buying program, the stimulus measures, which then could lead to a rate increase maybe sooner than some expected. And so all of those measures that could be talked about tomorrow are leading to some strengthening of the USD right now, and the fear index is up because of that as well. So we see the stock market pulling back. Gold pulls back because gold is a safe haven for inflation. If the stimulus measures are expected to be pulled back soon in the US and other places, European Union, UK, then that causes the opposite of inflation. Right? If you're going to stop printing the money, you're going to stop handing it out so easy, maybe you're going to raise interest rates to slow down inflation, well, then gold's not as attractive and gold sells off and the USD strengthens. So that's what's happening fundamentally today. So you can understand why the movements that have been occurred. And if the USD is strengthening, not only would gold drop, but maybe oil, etc. Now we take a look on the mobile app. Let me expand this on the screen, get a full screen view of our app. And if you don't have the AvaTrade Go mobile app, you can find it on our website under the trading platforms section, and you can get it on your mobile device. So I want to show you, because I want to be efficient in the webinar. Let's go right to a feature, and really you want to be efficient with your trading, right? Rather than randomly searching for something that looks like a good trade. Okay, you can click on this tab in the lower right, go to the advanced features here. And by advanced features, I'm talking about Market Buzz, which gives you fundamental news stories updated by the minute on most all of the major stocks that we offer. So you can see what are the latest headlines on Apple, Google, Amazon, etc. You've got featured ideas that really breaks down in detail individual currency pairings with indicators listed, the thinking behind it, the rationale, why you would take a trade in a certain direction, etc. The analyst views are more like trading signals, which we'll take a look at that right now. And so they're time stamped, but it doesn't mean that if you go down the list and one of the signals is a little bit older, it doesn't mean that it's no good, because it tells you intraday, like I'll give you an example here, Bitcoin Cash versus USD. Intraday on the downside prevails as long as 441.3 is resistance, meaning as long as this movement didn't go above 441.3, then they're saying the sell signal is still relevant. So it doesn't matter if it's 2 hours later, if the movement didn't break above 441.3 to show an uptrend, 441.3 is a resistance level that they're saying as long as it didn't break above that, then they still think it's a downtrend today. And then it tells you an alternative scenario as well. And if you tap on this, it gives you a more detailed explanation with the price levels on a graph, etc. So let's find something that might make sense today to look at. Makes sense that they're showing some of these, like USD Canadian is expected to rise. We saw the US dollar strengthening with fear. We know crude oil tends to drop when there's economic fear. And so if the crude oil would it be expected to drop with this type of fear and the USD is strengthening, then you would expect the USD maybe to gain against the Canadian, because the Canadian tends to weaken when crude oil drops, because crude oil is a major component of their economy. It's like the biggest part of their GDP. So they don't produce the most oil in the world, but they do have one of the largest percents of their GDP determined by crude oil. So if crude oil is dropping, many times the Canadian dollar is weaker than if crude oil was rising. Okay, so you can start to break down these signals and say, okay, which one do I trust the most based on my fundamental understanding? And if you say, okay, USD Canadian seems like that's a good pairing. And so then you take a look and you say, let me tap on USD Canadian and expand it. And it breaks down the price levels. It's got your take profit lines, are the green ones up here. They're saying an early out is this first price, and a later out is the second one. And it shows you as long as it's above this blue line, says the preference, long positions above 127.80, that's this blue line, 127.80, as long as it didn't come down and break below this price, then it's still expected that the USD would go up against the Canadian. If it did come down and break below this price, then they're saying you should sell, because something must have changed fundamentally if it breaks below this support level. You see here it's support, 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 and up. The price, once it went above this blue line a ways back on these 30-minute candles, it did not break below it. It became support. So the signal is saying they expect the USD to go up against the Canadian today. But if for some reason it breaks below this blue line, this price, then they would say, okay, the signal's no good because it's showing a downtrend at that point. Okay, so that's the idea of how to interpret the signal. blue line is, as long, in this case, if it's a buy signal, as long as it's still above the blue line, it's a valid signal. And as long as it hasn't reached the take profits, it's a valid signal, right? Now, if it's all the way up here already, right before the take profit lines, well, then maybe you'd say, okay, I got in late. But if it's teetering around down here, somewhere near this blue line, then you'd say, wow, that's a nice entry point if we expect the USD to climb. So ideally, we'd like to get an entry point if you're going to buy on this close to the support line, this blue line, or at least closer to the blue line than to the green lines, right? So you have a larger potential profit compared to risk if you put your stop loss below this support level. Then at the same time, you could put a pending order for the alternate scenario, okay? Alternative scenario. If it drops below that support level of 127.80, then it says look for further downside, because for it to break below this blue line, then it must have been a lot of downward momentum. And then you'd expect maybe it could carry to the next support level, these red lines down here. So the red lines are the take profit lines on the alternate scenario. So at the same time as you could do a market buy above the blue line, you could set up a pending order to sell if the movement breaks below the blue line. That would be a sell stop pending order, or on our app, you just tell it sell from, you give it the price, and you never have to tell it what type of pending order. Just tell it what price you'd want to sell from if that's how you want to set things up, okay? So the important levels to remember are 127.80, and then the take profit levels above that and below that, okay? So let's keep in mind 127.80. And let's see how close is the movement right now to that. So let's go back. Let's look at USD Canadian. I'll tap on the search button down here. And we'll quickly find USD Canadian. There it is. And we take a look at the chart. We're on a 4-hour candle chart, and indeed it's an uptrend. Had you looked at that signal earlier today, and it was an obvious choice all through the day with all the fear that was on the market, the fear volatility index was up nearly double digits all day, or at least 5-6% most of the day. And so it was obvious the USD was strengthening as the dollar index was showing green, and there was high fear. And it was obvious that crude oil was having trouble staying up. And so with all of that happening, for the past 8 hours, you could have been buying on USD Canadian just from a fundamental perspective, even without the technical analysis. And the technical analysis also would have shown that, hey, there's an uptrend, and you could have bought on that uptrend. And so we see the USD has been rising against the Canadian quite a bit. Now the question is it too late to buy on it? You know, we were talking about that signal with a line, with a level that was down a bit lower to get in. But you see how accurate that signal was. And had you looked at it earlier in the day, you easily could have made a move off of that. And the technical analysis is broken down for you. Let's go to the 1-day candles. And we'll take a look and see, we're up at 128.51, right? Okay, 128.51. Let's leave this for a moment and go back to that signal. And let's say, okay, the price is at 128.51 now. If we go to the analyst views, and let's look at that USD Canadian signal again. Here, USD Canadian. You know, it was saying take profit at 128.55, right? 128.55, and if you're more patient, 128.80. Okay, so we go back and we say 128.55, 128.80 is where they're saying in the signal to take profit potentially as a suggestion. So if I go to USD Canadian live chart again, $128.55 was the suggestion for the first take profit, and we're at 128.51. Okay, so we see how accurate that was, that the signal said it likely could reach 128.55. Well, it's almost there. And if you look, that's a resistance level right here in the 1-day candles. You see the 1-day candles hit here and dropped. tried again, and dropped. And now we get up to that level right at the top of this wick. You see the one-day candle here has a wick that went up and back down. It went to 128.55 and pulled back, if you can believe that. Let's go to the one-day candles. I mean, go off the one-day candles and go to like 1 hour candles. We'll zoom in on this view. And we see that indeed it reached right here, just below 128.60. Okay, or just about hit 128.60, right in that sweet spot range for the take profit from the signal, which was between 128.55 and 128.80. It got right in there. Now, it did not reach 128.80 yet. That's the next resistance level up that was shown in that signal. And we saw in the one-day candles, there's a nice resistance right where this reversed. So if you're trading on a pullback now, to say, okay, some of this fear might calm down. The FOMC committee didn't meet yet. This signal already carried out. It reached the first resistance level and has paused. So you could say, listen, maybe I take a shot at selling, because we know it's at the resistance level now. It would have been great to get in on this buy position earlier. This is a late webinar, right? It's later in the day. So we're looking at, well, what do we do after that movement already came to fruition? If you didn't follow that signal from earlier today, okay, fine. So let's take a look at the possibility of selling off the resistance and look at the opportunistic spot then that this could put you in. And I could switch this back to the one-day candles, right? And as I'm setting up the order, and there's our resistance, where the price is right at that resistance now. It may break through and keep running, okay? So you could do a couple things here. You could say, all right, let me sell on a market move off of the one-day candle resistance. So if I'm going to do that, then I come up here and I say stop loss above, stop loss above that 128.80 was the upper take profit suggestion, right? So, let me expand that back. So if I then say 128.85, okay, that gets me to have my stop loss beyond both resistance levels, not just the first resistance level that we see here in the one-day candles, but also above 128.85, which is up a little bit higher. And if you look on the 1 week candles, there's resistance further back in time, potentially at that level. So that gets us above all of the resistance on the 1 day candles that are showing. And we don't have to risk much to do that, because the movement is right up on the resistance now. Now we can look and say, if this does pull back down, if the US dollar does weaken, keep in mind there's hyperinflation on the US dollar right now. We just confirmed that there's hyperinflation on the US dollar. So while the US dollar is strengthening because of anticipation of what the FOMC committee might say tomorrow, the fact is the USD has hyperinflation and really, in all intents and purposes, is a very weak currency right now because of it. So in the short term, before the FOMC committee talks, you could see the USD pull back down now after all this fear that drove the US dollar up against the Canadian. So it's not a bad move necessarily to go after a pullback with a small risk, and you can see how much I'm risking compared to when I do my take profit, what my potential profit can be. Okay, so if this pulls back down to that support level, remember it was down at 127.50, something like that. So I don't even have to get all the way down that low, right? I can say if I go back to 128 even, okay, well before that support level down below that we saw, that blue line, if you remember in the signal, was a support level. So I can take profit on a sell at 128 well before the major support, and my potential profit is almost double what my risk is. And I'm taking profit early on that. I'm not even letting it go all the way to the resistance or to the support, and I still get a nice ratio potential profit to risk. Okay, now let's pretend that you're willing to risk, I don't know, 500 on the move. Maybe you have 50,000 in your account and you want to risk 1% and you want it, and that 1% then would be 500 risk. So it's easy for me to calculate my risk and make sure that I'm risking the amount I want, whether I want to risk 50, 500, or 5,000. Okay, I'm going to pretend I want to risk 500 here. So what do? I go up, I change my trade size while I can still see it's showing me how much I'm risking to my stop loss price. So now I can come here, change my trade size. Let me put 2.5 lots. Now I see how much I'm risking, 587. Okay, that's a little more than the 500 I said I wanted to risk. So now I just change the trade size, 2.25. Now I see I'm risking 530. Let me change it a little lower. How about 2 lots even? There it is. I'm risking 469, a little less than 500. So I can go after 850 profit, and I'm risking less than 500. If that's what I want, I've got it all laid out for me. I know my potential profit to my take profit. I know what I'm risking to my stop loss. There are no surprises here. If I'm ready to go, I confirm my position. So confirm sell. There we are. Now I'm in. I've got a resistance level on my side on the one-day candles. If the US dollar gives back some ground, I can take an easy take profit at 128 right here. That's before it enters this gap up here on the one-day candles from the weekend. Okay, over the weekend, the US dollar gapped from Friday's close here up against the Canadian on Monday's open. So taking profit at 128 takes the profit without it ever having to try and break into this gap. Usually a gap is a support level, okay? Many times you'll find if it gaps up from one day to the next over the weekend, in this case, then if the price comes back down, it tends to find some support at the top of that gap. And if it re-enters the gap, many times it will fill the gap and come all the way back to the bottom of the gap. So for now, since that would act maybe as support, the top of this gap, we're taking profit just before that at 128 on this potential sell position. That's the idea here. Let me address a question I see that has popped up here. Okay. The question was, when you're looking at, let me go to our home view. When you're looking here, you see buyers and sellers. You see a percentage. 59% sell, 59% buy, etc. 61% are selling. That's just showing you the trending of what people are doing at the moment. It doesn't mean that's the percent risk or the percent chance of winning if you go that direction or anything like that. It's just showing you which way things are trending. And it makes sense, right? Why would more people be selling on the Australian JPY than buying? For example, the Australian dollar tends to strengthen on exports when the economy is doing well. If there's fear that stimulus measures will be pulled back by the European Union, by the US, by the UK, other places because of hyperinflation, then the yen is strengthening as a safe haven currency, and the Australian would maybe be expected to weaken because it's an export economy, the Australian nation, and if stimulus measures are pulled back, then economies might not do as well moving forward, and that might put bearish pressure on the Australian, who export large amounts of iron ore and coal, etc. And so if stimulus measures are pulled back, interest rates are risen back up, that would hurt maybe demand then for products coming out of Australia if economies find it tougher to get by with less stimulus measures. And so as stimulus measures were increased, the Australian dollar strengthened. And as stimulus measures are pulled back, you could see the Australian weaken. And so this number here makes sense why the Australian would weaken against the yen being a safe haven currency that people rush to when there's fear. And we all saw that there's fear today. So pairings against the yen on economies that maybe would be hurt by decreased stimulus measures, it makes sense that these are showing more people are selling than buying. Okay? So that's what those percentages are showing you. It doesn't mean that the entry point is correct now. For example, you might see that it shows more people have been buying on USD Canadian than selling. Well, that's true. And the USD went flying up. But now I just showed you a reason why you might actually sell in terms of the technical analysis on the USD Canadian, which is the opposite direction of what people have been doing today. Because now we've reached the resistance level that the signal showed you. The signal in the app showed you, hey, at that certain price, you might think about taking profit. And if people are taking profit at that price, then that means they're selling the USD. Then it makes sense that the USD could pull back down if they're selling at that resistance level. Okay, so these percentages are showing you what already happened, not necessarily what you should do now, as we've demonstrated with the USD Canadian, maybe with our example. Obviously, no guarantee on the USD Canadian dropping. You could put a backup move on that USD Canadian, a pending order above that resistance level on the one-day candles, a pending order saying buy if it goes up above that price, meaning, hey, there's still momentum if it breaks that one-day candle resistance. Okay, that's a backup option on that. So maybe we take a look on the web trader next. Let's leave this this view. Whoops. Let's leave the view, if I can, if it's going to let me, of my app. There we are. I just ended my screen sharing of the app. So if we go and log in here from our main website, then we are in the web trader platform, which looks like this. And it functions just like the app. It has all the same features. It has the Forex featured ideas, the analyst views, the market buzz, all of that extra stuff from Trading Central. You find it here under Trading Central. Okay. And you might find that it doesn't work on a demo account or an unfunded account. You'll have to have a funded live account for these features to work on the web trader. I believe on the app, it works even on the demo accounts. Okay. If I click on this analyst views on my web trader, see, it tells me it's not available unless you fund the account. Okay. I think we're working on maybe making that available on demo accounts on the web trader as well. To me, that makes sense because it works on the app anyways on demo accounts, which I'm working here on a demo account basically. Okay. Now, the next question is 81% sellers, 19% buyers. Does that mean it'll go down? I think we addressed that. It means it went down already, but it doesn't mean it will continue to go down. That's why we did the technical analysis to take a look. All right. All right. The fact that you're saying it's showing most people are selling now in the USD Canadian, it's looking at the recent history, and guess what we just did? In the demonstration I just showed you, we sold on the USD Canadian. Why? Because it reached the resistance. So that just shows you that it's showing you the recent history, not just what happened all day long. Because if it showed you what happened all day long, it would say people are buying on USD Canadian because we see that it rose up. But the fact that it's saying 81% are selling, it's telling you what they're doing recently. And it makes sense that it's at the resistance. A lot of people might be selling right now in the USD Canadian. It doesn't mean that that will win, but it's at least giving you an idea of what others are doing. And this is our position. We still, because it was a somewhat large position, we haven't overcome that spread just yet. Okay. All right. So let's take a look at crude oil. What is happening with crude oil? I haven't even looked at it recently. Let's look at Brent crude, maybe. Or let's look at the US crude, West Texas Intermediate. And I'll expand that chart. And if we look at, let's go to 30-minute candles. What do we see? Oil's been dropping, right? It broke this support level here that I drew from a prior webinar. Down it went. And it's tried to bounce back up some. And now this area up here is resistance now. Okay, this was old support, up, support, up, support, up. Then today it breaks below that, hits a low and bounces back up. This is a correction on all the dropping that occurred. So now crude oil is coming up near this resistance, And if we go to, let's go to bigger candles now, 2 hour. And we can see, here's that support level I drew, and I can even cheat that down a little. Support, 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 and then broke below, and now it's trying to come back up. This should act as resistance now. This broken support, this was a support level, it broke below, and now it's come back up. Technically speaking, broken support usually acts as resistance. So this looks like an entry point that when we look at the 5-minute candles has come up for us. You see up, 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 up on the 5-minute candles, but now it's at the resistance that we see on the 2-hour candles. So that's an opportunistic bounce if you believe today's fear will drive crude oil down again and that the USD could potentially strengthen. Now, this is a hedge on that USD Canadian as well, because we're selling in that simulated example on the USD Canadian, expecting maybe the USD to weaken and the Canadian to come back down. If in this case we say, no, we think crude oil will drop, that means if the USD strengthens, crude oil likely would come down. So if we lose on the USD Canadian because the USD Canadian strengthens, or the USD strengthens, then likely we can win on a sell on this. Okay? You see how they act as a hedge of one another. And both of them were getting an opportunistic entry point because they were both right at the resistance level. So it could make sense both fundamentally and technically, especially to go after a somewhat of a hedge on that USD Canadian sell by selling on crude oil right now from just under the resistance, which is the broken support from earlier today. So we go here, maybe sell on crude oil, do a market sell. Again, maybe I want to risk that same amount, 500. Okay, so I'd program a stop loss with a trade size so that I'm risking 500. If I do a stop loss that's up, let's say, 75 cents from the current price. So if the current price is at 70.36, let's go just above 71, 71.10. Okay, so if I say 71.10 for a stop loss, now I can do a trade size. That gets me above that resistance level here. Okay, 71.10 would be up here, well above the resistance line we drew. And so 71.10, let's do a trade size of 0.5 lots. How much am I risking? 370. Okay, I can go bigger if I'm wanting to risk about 500 per trade. 0.75. Now I'm risking 570, so let's go 0.7. 525, 0.68, 0.67, 0.66. Now I'm risking 501. Okay, that's pretty close. 0.65. Now I'm just under 500. So it's up to me. Do I want to risk just under, just over? Let's go 0.66. And now the price went our way because I'm risking well, it's bouncing around, isn't it? I'm risking 514 now from that price. So 0.65, that's about 500 risk. Take profit, I can just say, okay, I'm gonna go $2.50 down. So I'm gonna go 67.8. Okay, 67.8 on my take profit. I'm going after over 1,600 possible profit, only risking just under or just about 500. And so there I am selling. And so why does that trade make some sense? I've got a resistance level that we see right here that I drew around 70.43. And we put a stop loss up above the resistance at 71.10. So stop loss, if I drag this down, is at 71.10, which is here. Okay, this is a stop loss. It would have to break this resistance on the 1-day candles. Again, let's go to 1-day candles. And we see the resistance level on the 1-day candles. It's easier if we go, I think, to 2 hour. And there, that's easier to see. Here's our resistance level on 2-hour candles, which is a support level here, support, support, support. It broke below that today and plunged, pulled back up. And so here it is just below that broken support. Our stop loss then is at 71.10 up here. We'd have to break that resistance and climb all the way up to here to hit our stop loss. Our take profit is about 3 times that in terms of potential profit. And so this sets up nicely when we look at the 1-day candles to say, wow, there's not a support level until you get down, and let me draw another line. You don't see a nice support level until you get down here, around 65, 66. And we're taking profit well before that in the 67 range up here. So you easily could reach your take profit without ever having to even approach this support level down here on the 1-day candles. Okay, so these are a couple examples of how you can use the tools on the web trader and the AvaTrade Go mobile app to find some signals that make sense with what you're thinking fundamentally already, to use the technical analysis that's outlined, to set up your trades for exit points, entry points, and really have confidence in understanding exactly how much am I risking, what percent of my balance am I risking. If I have a certain amount I know I want to risk on my move, it's calculated for you in the order window. What's my potential profit, etc. Very simple to use, very simple to use your technical analysis and also to take into account fundamental ideas as well. Any questions before we end things? All right, great. I don't see any questions popping up. If you think of something, we're doing another webinar tomorrow, earlier in the day. You're welcome to attend. And then I'll be on vacation for about 10 days. So I'll pick up after tomorrow's webinar. I'll pick up in a couple weeks on the webinars that I'm doing. But there are other webinars that are offered by other presenters as well that you can attend. And you can also view recordings of all of them on our YouTube channel, including this one. So good luck with your trading. I believe there will be a lot of movements yet to come, some nice bounce movements, even some breakthrough movements. Get your pending orders in, get your market moves going based on the technical analysis that makes sense to you and the fundamentals. That we understand there's a lot of fear right now, but also maybe some overreactions that have occurred. So there could be some nice pullback movements as well to take advantage of. So good luck with the trading. Take advantage of the signals and the other tools that are in the web trader and the AvaTrade Go mobile app. I really think those signals are a great tool like we looked at today as well. All right, everybody. Thanks for joining. Until next time, good luck with your trading.